Hello guys, welcome to Bhavna's Online Academy. So in this video, we are going to cover Ind AS 116. So Ind AS 116, as you all know, talks on leases. So leases, if you see your FR module 2, this covers around 150 pages in your module. This is quite lengthy in itself, but if understood properly, this is one of the simplest Ind AS which you will come across. So the plan for this Ind AS is that we are going to try to cover all the concepts which are there in this Ind AS, and along with that we are planning on also covering all the ISM illustrations, Institute Study Materials, all illustrations. I think there are around 50 illustrations. So we'll also try to cover them all in this video. So before we get into the video, I'll just tell you how we are going to split up this video into parts. So for now, I'm planning to put this Ind AS 116 into 3 parts. The first one will cover the theory of this Ind AS 116. The second part will have the practical portion of how to account for leases according to lessee. And the third part will be lessor accounting. Okay, so this is how we are going to split this Ind AS into 3 videos. That's the plan for now. There might be a few changes after that too. So this is how it is going to be, and this entire Ind AS we are going to cover using the mind maps. And then our institute study material we'll refer for illustrations alone. Okay, and this mind map you will either find it in the description box below, or I'll link my Telegram channel from where you will find this too. Yes, so without any further ado, let's begin with this video. So Ind AS 116. So starting with this Ind AS, before we get into the entirety and the depth of this Ind AS, let's first understand lease in simple terms. Okay, so in this Ind AS, what they tell you is there will be one person. Okay, suppose we'll take person A, and he will be known as the lessor, and then there will be a person B. Okay, and he will be known as your lessee. So here, who is the lessor and who is the lessee, and what do they do is what we are going to understand. Suppose what happens is that lessee, that is the person B, is in search of, suppose, a car. Okay, and he wants a car, but he does not want to buy the car. Rather, he wants to, suppose, rent a car. Okay, or want to have a car for a certain period, and he will be ready to pay some rent on it or pay some lease on it. Okay, a lease payment on it, right? So what he'll do is he'll go in search of this person A, and the person lessor is the person who owns the car. And this particular person will be ready to give this car on lease or give this car on rent in simple terms. Okay, so here what will happen? Here an exchange of asset will happen where the lessor is going to give lessee an asset. He will give his car to lessee for a certain period. Okay, for a fixed amount of period they will give. Suppose for 5 years he is giving on rent to him. And in return of that, the lessee B who is there, he is going to pay some value yearly like your rental payments, or you can call them as your lease payments. This is what is lease in like simple terms. Okay, so now we are going to understand 116 leases in detail. Okay, yes. So when we are talking about this 116, before we get into what and all is applicable under 116, let's study when and lessee has an option that he cannot apply 116. So there is lessee, as I told you. Lessee is the person who is going to get the asset, correct? So this lessee has an option that he need not apply Ind AS 116. Even though he has taken something on a lease, he need not apply Ind AS 116 and account accordingly. Okay, so what are those cases is what we are going to understand now. There are a few exemptions. Okay, and lessee has the option whether he wants to apply Ind AS 116 or not on these specific cases alone. Okay, so the first exemption is of short-term leases. So here what happens is that what Ind AS 116 tells you is that in case if you have got a lease, and if the lease is of a short term, of a shorter period, or if the lease is of an asset which is of low value, either it is a short term lease or the value or the asset which you have taken on lease is a low value asset, then in both of these cases you need not apply 116. Okay, you have an option. If you want to apply, it's okay. If you do not want to apply, then it's okay. You need not apply 116 on these leases alone. On all other leases you have to apply Ind AS 116. So now we have understood that short-term lease is an exemption here. So what does short-term lease exactly mean? So short-term lease means any lease whose lease term means, example, your rental period, for how much time you are taking that asset on a lease. Okay, so that lease term should either be of 12 months or lesser than that. Lease term should be of 12 months or lesser than that. Okay, so if any asset is given on a lease for a lease term of 12 months or lesser than that, then it will come under the classification of a short-term lease. Okay, but there are two more conditions which the short-term lease has to fulfill apart from being a lease term 12 months or less. Okay, so the first thing is that it should not have an extension option. It should not have what? Extension option. That means if there is lessee. Okay, so usually in this Ind AS 116, lessee has a lot of powers. Okay, so lessor suppose gives lessee an option that right now the lease term is only of 11 months. So this is a short term lease. But lessor gives lessee an option and tells him that if you want to extend this lease, if you want to what? Extend this lease to around 2 years, you can do that. We will give you an option. Like that, who says to? Lessor says to the lessee. Now lessee has an option to extend the period. Okay, and here if the lessee is reasonably certain that he is going to extend the option, he is going to avail the extension option and is going to extend the lease term to 2 years, then in such case it will not be known as a short term lease even though the initial lease term was 12 months or less. So here you must remember that the lessee, even though if he has an option for extension, he must not be reasonably certain or he must not be willing to extend it. Then only in such case it will come under the criteria of short-term lease. The second condition that it has to fulfill is that there must be no option to purchase. Again here what happens? Our lessor can give lessee an option that at the end of lease term you can purchase this asset. Here when somebody is given an option to purchase, lessee, whether he is reasonably certain or not, it does not matter here. If lessee has an option to purchase itself, that particular lease cannot be classified as a short-term lease. Here the option to purchase should not be there at all. It doesn't matter whether the lessee is reasonably certain or not, the option to purchase should not be there with the lessee. Okay, so why does it not come under short-term leases? Because if you have an option to purchase and suppose you purchase it, then it is no more a short-term lease. Then the asset becomes yours itself. The entire period of the asset is with you only. Okay, so it will not come under short-term lease. So short-term lease is an exemption where you need not apply Ind AS 116 if the lessee does not want to apply it to. So what is a short-term lease? Any lease which has a lease term of 12 months or less. It should not have an option for extension, but even if it has an option for extension, the lessee should not be willing to extend it. And the next is there must be no option to purchase. Okay, so I hope you understood what is a short-term lease. Or if it is a lease of low value item also, you have the option to claim the exemption where you need not apply Ind AS 116. So what is the low value asset? So what is the low value? As examples for your low value assets are your laptops, chargers, furnitures, which in proportion has a very low value to it. So in this particular, when we talk about low value, this Ind AS 116 does not have any set definition for low value. It does not have any set definition for low value. Like it does not set a price, because what happens? Company to company low value differs. Suppose there might be a small shop at the end of your street. For them, the low value definition will be different from that of a Reliance. Okay, so when you compare different industries or different businesses in general, the low value definition will change. Okay. So here there are two conditions which the low value asset or the asset should satisfy to be called a low value asset. There are two conditions which an asset which is given on the lease should satisfy if it has to be called as a low value lease. Now what are those two conditions is what we are going to understand. The first one is that when you are using that asset, okay, suppose you are using a laptop. When you are using the laptop, the benefit that you are going to get from the laptop, you should either get it from the laptop directly itself, or you can also get it together with other resources. Okay, so benefit you must get from the use of it, right? And then the second condition is that that asset which you are using should not be highly dependent or highly interrelated with other assets. Laptop you can use on its own itself. It is not highly dependent or interrelated with any other asset, and you are also getting a benefit from the use of it. So since both of the conditions are satisfying, it can come under the criteria of low value asset. Now if you take the example of a laptop charger, okay, it will satisfy the first condition because you're getting a benefit from the laptop charger. Either on its own, you are not definitely getting on its own, but you're getting it together with other resources. If you're plugging it into a laptop, you're getting a benefit from it. That is fine. But the second point which is there, second condition, that it should not be highly dependent or highly interrelated. Here what happens? Here that laptop charger is highly dependent on the laptop. If you are just going to give laptop charger to someone and they don't have a laptop, then the charger is of no use there, right? So here the second condition does not get fulfilled here. Okay, so laptop charger cannot come under the definition of low value assets. Okay, yes, I hope you understood this. Yes, so here then there is one more point which you have to remember is that lease of low value assets are exempted regardless of whether those leases are material to the lessee. So here what they are telling you is that if there is a asset, okay, and if you have now it has fulfilled two conditions which it had to fulfill, and now it has been classified as a low value asset. Okay, regardless of whether the asset is material to the lessee or not, it is not important whether the asset should be material to lessee or immaterial to lessee, or it must fulfill any other condition. If these two conditions are fulfilled, then that is more than enough. You can take an exemption to exemption not to apply Ind AS 116, right? Okay, so now here there is one more thing that I wanted to discuss. It was now when we talk about low value assets, another example for low value asset can also be a car. For a few companies, car can also be a low value asset. But here one thing that you have to remember is that now suppose we take an example where you have taken a car from a lessor on a lease, but that car is suppose a very old car. Okay, suppose the car is a very old car. Here you will not judge the car depending on whether what is the value of the asset or value of the car right now. Okay, right now the value of the car can just be 50,000 or 1 lakh. But you have to see if the car would have been purchased right now, or if the car imagine you go behind a few years and just imagine if the car was just freshly purchased, then at that point of time what was the value of the car? If at that point of time the value of the car was suppose 1 crore and today if it is 50,000, then in such case this is not the right way to measure, right? So you will always assess the value of the asset based on when the asset was new. Regardless of the age of the asset, you have to just assess the value of the asset thinking it is a freshly purchased asset, or if we would have freshly purchased it at that point of time, at what value we would have purchased. Okay, yeah, so this is one point that you have to remember. Okay, yes, so that was about low value lease. So here what they are telling you is there is one more thing. There is one low value, there is, if suppose there is an asset, okay, and even though it is fulfilling all the conditions, there is one thing that you have to remember, which is suppose there is a concept known as subleasing. There is a concept known as subleasing. So here what happens is that there is a lessor, there is a lessee. Lessor is giving a laptop to lessee on lease. Now what is lessee? So lessor is A, lessee is B, and there is one more person known as C, and this person again wants a laptop on lease. So the person B, what he does is he is subleasing the laptop and giving it to C. Now first the B person, or the B which is the first lessee, he has taken a laptop on lease from A. The same laptop B is giving to C on a lease again. So this will be known as your sublease here. This will be known as your subleasing here. The asset that you have taken on lease itself, again if you are leasing it back to someone else, that will be known as subleasing. Okay, so this is the concept of subleasing. Here A will be known as your lessor as usual. B will be your lessee, or you can also call them as a intermediate lessee. Intermediate lessee. Okay. Yes, and then the C will be your lessee again. Okay, got it. Hope this is clear. Now here what they are telling is, if you are applying the concept of subleasing, even if the laptop is fulfilling the condition of a low value asset, if the lessee is subleasing the asset again, then in such case you cannot apply this exemption. You cannot apply the exemption on it. You have to account that particular lease as per Ind AS 116 only. So if the lessee is planning to sublease, then in such case the head lease means the laptop, the asset that you have taken on lease, can't be accounted as a low value asset, and Ind AS 116 provisions have to be applied on it. Okay, yes. So one thing that I forgot to say in terms of short term leases is that, if suppose, let's take this example to understand better, if there is a lot of office equipments, okay, now suppose there are 4 office equipments, A, B, C and D. Now here the lease term of office equipment A is 10 months, B is 11 months, C is 7 months and D is 15 months. Okay, so here what they tell you is that if you are applying a short term lease exemption to a particular asset, okay, then in such case you must apply that exemption to all the same class of assets which are there. Suppose if you are taking a exemption, suppose there is asset A which is having a lease term of 10 months, and for this if we have taken exemption, then in such case all the office equipments should come under the exemption. You cannot take a class of asset and in that class of asset only for one asset you cannot apply exemption. If you are taking it for a class of assets, then for all the assets which are coming under that same class of assets, you have to apply the exemption for. Understood? Now suppose here there are A, B, C and D. A has a lease term of 10 months, B has a lease term of 11 months, C has a lease term of 7 months, D has a lease term of 15 months. Now here the 15 months is more than what? 12 months. So this D here, on D you cannot apply. On D you cannot apply the exemption, short term lease exemption. Okay, so D will go out of the radar. Now you have 3 office equipments which are left. A has already come under the short term lease exemption. Now what about B and C, which are coming under the same class of assets? Here the standard says, since all are coming under the same class of assets, and all of these leases are lesser than 12 months, the lease term is less than 12 months, the short term lease exemption should be applied on all of these assets. So same principle has to be applied on all same class of assets. There is one exception. If the asset's lease term is more than 12 months, then you can leave that asset. Okay, so this was all about your exemption. Now here, how will you recognize this exemption? So here what you are going to do is, whatever lease payments that you are going to get, the lease rentals that you are going to get, in exchange you have taken an asset, for that you have to pay something, no? So the lease payments that you are going to make, or the lease rentals that you are going to make, it should all be recorded as an expense. It should all be recognized as an expense in your P&L. Okay, so in P&L, like if you are spending money, that way you have to recognize it in your P&L. Here they are telling you have to recognize it on a SLM basis over the lease term. What is SLM? SLM, how? Suppose if there is a lease rent, in year 1 you have to pay 40,000, in year 2 you have to pay 20,000, and in year 3 you have to pay 30,000. Year 1 40,000, year 2 20,000 and year 3 30,000. Okay, here every year wise you cannot record 40,000 in P&L, 20,000 in P&L, 30,000 P&L. No, like this you cannot record your lease payments, even though this is how you are actually paying it. You have to show it in your books in SLM basis only. You have to take the total of all the lease payments and amortize it or expense it in a straight line method. So the total of these three is 1,20,000. So you are paying 1,20,000 over a period of 3 years. So divided by 3. So 40,000 every year you have to record it in your books as an expense. Okay. So always record it on SLM basis, straight line basis. Okay. I hope you understood this. So here now we read about if the lessee has an option to take an exemption, in which case it can take an exemption. Exemption means you need not apply the provisions of Ind AS 116. Okay. So here there is one more topic that we have to discuss. So here what happens is that suppose there is some lease modification. You have taken this exemption. After taking this exemption, there is some lease modification. That means there is some changes in the lease term or lease value supposedly. There is some lease modification, some modification in the lease itself, and then or else there is a change in lease term. If there is any of these two, then in such case you have to wait and see whether you are still qualifying to get the exemption or not. Okay, that means still whether you are fulfilling the conditions that you have to fulfill or not, even after the lease modification or the change in lease term has happened. If you are still qualifying to get the exemption, then no issues. Continue with the old lease agreement itself and go on as you were going on. But if something happens due to the lease modification or change in lease terms that you get disqualified for the exemption, then in such case you have to stop that old lease agreement then and there and start a new lease agreement and account and record accordingly. Okay, and record accordingly. Okay, yes, I hope you understood this point also. Okay, now next topic that we are going to move on is to understand about the dates which are related to lease. So there are two dates that you have to understand in relation to lease. One is your inception date and the other one is your commencement date. So what is inception date? What does inception means? Inception means the start of something. Inception means the start of something, your starting date. Okay. So what you have to do is at the inception of the contract. Contract means if you are getting into an agreement with someone. At the start of the contract, the entity which is there, you have to assess. The entity has to assess whether the contract which you have entered into with a person, the contract which you have entered into a person, whether it is containing a lease or not, whether it is containing a lease or not. If it is containing a lease, then you will record accordingly. If it is not containing a lease, you will just record it as a normal contract. So the inception of the contract itself, entity has to assess whether it contains a lease or not. Okay. So what will be the inception of the contract? That means what will be that inception day at which you have to assess whether the contract is containing a lease or not is the inception date. So what is the inception date? Inception date is the earlier of lease agreement date or the date of commitment by parties to terms and conditions. So what is first lease agreement date? Lease agreement date is a formal date where two parties have come together and decided that today we will get into a contract and have signed their contract on that day. Suppose they have come today, they have discussed whatever they had to discuss, they drafted an agreement, both parties signed on that agreement and they have made a lease agreement. So if formally something like that has happened on a particular day, then that date will be known as your lease agreement date. Okay, so either that or earlier of. Suppose here what happens is that there are two parties again. These two parties are just, have met for a coffee at a cafe. And in that cafe itself, they are not drafting a legal agreement or they are not drafting an agreement or signing on it. But by mouth itself or in any other way has committed that they are agreeing to get into this lease and they are agreeing to all the terms and conditions of this lease. So informally also if they have agreed to these terms and conditions of a lease, that means that date will be known as your date of commitment. Either the lease agreement date or the date of commitment which you have done informally, earlier of either of these both will be known as your inception date. So whichever happens first, that will be your inception date. And at that date, the entity has to assess whether the contract is containing a lease or not. Next is the commencement date. What is commencement date? Commencement date is the date at which you are going to record the lease in your books, in which you are going to record the lease in your books. Okay, yes. So the lease will be recorded and accounted in the books. So the lessee in his books will create a lease liability and a ROU asset, and the lessor in his books will create a net investment in lease if it's a finance lease. So what is this? We'll understand it in the later part of the chapter. For now, just understand that you will record the lease in your books and on the commencement date. Okay. So commencement date. So what is commencement date? Which date will you call as a commencement date? So the date at which the asset was made available to use to the lessee by the lessor. There is one date where the lessor comes up and tells to lessee that today you can take this asset and start using it. If the lessor has made the asset available to lessee for using it, that date will be known as your commencement date. That date will be known as your what? Commencement date. Okay. Yes. So now here there are a few things that you have to ignore while you are calculating this commencement date. Just a second. Yes. Okay. So what are the few things that you have to ignore while you're calculating your commencement date? Is the first one your lease agreement date. Here it does not matter in your agreement what date the lessor has told that he would provide the asset to the lessee, or at what date the lessor will make it available to the lessee. It does not matter what is on the papers. What has happened in real life is going to matter. So in real life, if suppose in the agreement they have told the lessee will make the asset available, the lessor will make the asset available to the lessee on suppose 5th as per agreement, but in real life he was only able to make it available to use on 10th, then 10th will be your commencement date and not your 5th. So don't look into the agreement dates. Second, don't think of the date at which a rent payment is starting. Just think of the date when the asset was made available to use for the lessee. The third one is, it does not matter at what date the lessee is starting to use it. It does not matter at what date the lessee is starting to use it, but it only matters at what date lessor has given it to the lessee to use it. Okay. So, you need not think that, suppose if the lessee was there, okay, on 10th itself the lessor has made the available, asset available to lessee. But lessee wanted to make some leasehold improvements. That means they wanted to do some modifications to the asset or something. So it took them a month, and on the next month, the 10th only, lessee was able to start to use it. That does not matter. That does not matter. Here you have to only see when the lessor made it available to use. So that is about your commencement date. So now we have understood the exemptions related to 116, where the lessee has an option to apply to such exemptions, and the dates we have understood, the inception date and the commencement date. Okay, so now we are going to get into the in-depth of this chapter. So let's continue. So now we are going to get into the main part of the chapter. Okay, so this is now when you're going to understand what is a lease exactly. So starting with what is a lease. So now, until we have read now, you would have understood that there will be one contract, and in that contract there might be a lot of points which are included. In that, one point might be related to the leasing of an asset. Okay, so this leasing can either be a contract itself, the entire contract can be about a lease, or a part of the contract can be about a lease. That you have understood. So in that part of the contract, or in that contract where you have mentioned about leasing, there are a few things that you have to be explicit about. One is that the lessee should have the right to control the use of the asset, and that asset should be an identified asset, and there it must be for a specific period of time. The lessee must have a specific period of time in which it can use the asset for an exchange of consideration, which the lessee will definitely pay. So I am not very sure if it is clear to you all now, but we will go through this one by one so it becomes clear to you. The first one I told you was, lessee should have the right. Here, just remember, when we are reading what is a lease or the definition of lease or all the other points, always think from the perspective of a lessee. Always think from the perspective of the lessee only. So here, lessee should have the right to control the use of that asset. So how the asset should be used, the lessee should have a control on it. The right to control it should be with the lessee. So now how do you define the right to control the use of an asset? So there are two conditions that has to be fulfilled to be said that the lessee has the right to control the use of an asset. First one is, the lessee should have the right to obtain substantially all economic benefits. So if you are using a particular asset on lease, suppose you are using a plant and machinery on lease, and from that plant and machinery, suppose you are getting some outputs. Okay, the outputs suppose when you are selling this outputs, you are getting some money in return, correct, as a sale revenue. All that economic benefit should belong, if not totally, at least substantially, to the lessee only. Okay, so the lessee should have the right to obtain substantially all economic benefits. And the second point is, the lessee should have the right to direct the use. Right to what? Direct the use. That means how the asset should be used. How the asset should be used, whether it should be used in the night or in the morning, whether one worker will work on that asset or whether 5 workers are going to work on that asset. So how the asset should be used, the right to direct it should be with the lessee only. So if these both conditions are fulfilled, one is obtaining substantially all economic benefits, and the second one is having the right to direct the use. If these both are with the lessee, then in such cases it is said that the right to control the use of the asset is also with the lessee. So now let's see in depth about what does the right to obtain substantially all economic benefits mean. I just explained to you over example. So here the right should accrue to the customer from use of an asset. Okay. So here what they are telling you is after using the asset, the lessee should get all the economic benefits that we have understood. What kind of benefits can you get from it? What kind of benefits can you get from the asset? Here there are three examples which are stated. The first one is the asset's primary outputs shall accrue to the customer. That means here what is first accrue, customer mean, I'll clear out. Here the customer means the lessee. Whereas if there is anywhere where it is used as supplier, it means the lessor, because the lessor is the person who supplies the asset. Correct? And the lessee who is getting it, so lessee here will be known as the customer. Okay. So the primary outputs of the lease or the lease asset should belong to the lessee. Okay. And then if there is any byproduct, suppose you have taken a plant and machinery, and from that if you are suppose manufacturing biscuits. So all the biscuits substantially, if you are selling these biscuits, all the economic benefits should go to the lessee only. If there is any byproduct that you are getting while you are manufacturing biscuits, the cash flows which you are going to get from the sale of byproducts, or however you are going to use this byproducts, that also should go to the lessee only. That should also go to the lessee only. And finally, if there is any benefit which you are realizing, by subleasing, suppose that plant and machinery, the lessee is subleasing to someone else again, the benefit that you are going to get from the sublease, or the payments that you are going to get from the sublease, should also belong to the lessee only. So any form of benefit, either primary output itself the lessee is getting, or the byproducts cash flow the lessee is getting, and or maybe if it is sublease contract, then in such case the sublease benefits the lessee should get. So in any form the economic benefits can come to the lessee. Okay. Yes. So when you are seeing this, there are a few things that you should not consider when you are determining whether lessee has the right or not. First, if suppose here what happens is that there is a contract which requires the customer, or which requires the lessee to give a portion of the cash flow to the supplier. That means a portion of, here there is a contract where there is lessee, and lessee has agreed that he or she will give a portion of the cash flow that they are generating from the asset to lessor, then it's okay. You can give a portion of it, but substantially the benefit should come to the lessee. So this you need not consider while making. You need not have this as a consideration that whether the right is with lessee or lessor. This does not matter that much. It's fine. And the second thing is that right that solely protects supplier's interest. So here what they are telling is, here this is actually related to the next point, but okay, I'll explain it right here itself. So if there is suppose lessor is there. Lessor has suppose given a bike as a leased asset to the lessee, and lessor has put a condition that this bike particularly, you will not ride it above a speed of suppose 60 km per hour. Okay, you will not ride it above that speed. Now, if there is certain condition like this, okay, which is restricting the restricting the right of the lessee, but that is only to solely protect the supplier's interest, because if a lessee is going to ride the bike on a speed over than that, then there might be some damage to the bike. Only for a general protection of the asset or protection of the lessor's interest, if there is some condition that is being put, that also you need not consider when you are considering who has the right. Such conditions are fine. Okay. Yes, so that was all about right to obtain substantially all the economic benefits. Okay. Next is right the direct to use, right to direct the use. So now how are you going to see who has the right? Who has the right to direct the use of the asset? So you will say lessee has the right to direct how to use the asset if lessee can say how and for what purpose the asset should be used. If the lessee is able to say, if there is a plant and machinery, that the plant and machinery, how it should be used. It should be used, only in the morning with only 2 workers. And for what purpose means only for, producing biscuits. If such conditions, lessee is able to put on the asset that for how and for what purpose the asset should be used, then the right is with the lessee only. Then in such case, you can say the right to direct the use of the asset is with the lessee only. Or here, either that, or if the lessee was a major part in designing the asset. Okay, suppose lessee had a major take on how the asset should be designed. Okay, that this specification should be there in the asset, or that specification should be there in the asset. So if lessee has taken active part in designing the asset also, then in such case we can say that lessee had the direct use of the asset. Or either lessee can have the operating right to the asset. Okay, operating right to the asset. Operating means how the particular asset should be operated. Yes, okay, fine. So here now we have understood this. Now what if here we told that lessee can also decide for what purpose the asset should be used. If suppose the asset's purpose is predetermined in the contract itself. Here the lessee cannot decide, but in the contract itself they are predetermined for what purpose the asset should be used. Then in such case, how will you decide who has the right? How will you decide who has the right? Here, the person who has the right to operate the asset, or the person who has the right to direct others to operate. Either the lessee must be able to tell that this is how you should operate the asset. Either when he is directly doing it, he must have the right to operate it the way he wants to. If suppose others are operating it, suppose what happens, lessor has given a car. Lessor has given a car on lease to a lessee. Okay, and the lessor for his own interest have sent a driver together with the car. So he has told lessee, you don't drive, but use the driver for driving the car if you want to go somewhere. Now if the lessee has the right to tell the driver, the person who is operating the asset, whether, how, when and where he can go or he has to go, then in such case we can say the lessee still has the right of the asset. And if the lessee had taken active part in the designing of the asset, that is a significant judgment was with the lessee, then in such case also the lessee has the right. Okay, so how can the purpose of asset be predetermined? Either in the contract itself you have defined it, or the design of the asset is such that you cannot use it for any other purpose. For that predetermined purpose only you can use it. Okay, yes. Now what if now you have understood the general cases. Now what if there is an asset which is specifically customized according to the lessee? Then in such case it is very clear that lessee only has the power here, because specifically it is customized according to the lessee. Okay, next and the final one, if lessee cannot change the output throughout the period of use. Suppose if lessee does not, it's a general case, neither the purpose is predetermined nor it is customized. It is a general case where the lessee has taken a asset on lease, and here the lessee is not, if a plant and machinery is given to lessee suppose, and with that plant and machinery you can you can manufacture any kind of eatables. It can be chocolates, biscuit, anything you can manufacture. But if the lessee cannot change the output throughout the period of use, that means during the lease term, if at the start he was producing chocolates, now if he cannot switch to producing biscuits as per his own wish, and he does not have the right to change the output throughout the period of use of the lease, then in such case the power is not with the lessee. So this was all about the right to direct the use of the asset. So if the lessee has the right to obtain substantially all the economic benefits, and if the lessee has the right to direct the use, then in such case lessee is said to have the right to control the use of the asset, Okay. This is one part of the lease. The second part is that the asset which you have put into the contract as in the lease contract, it should be an identified asset. So now what is an identified asset is what we are going to understand. Identified asset in simple terms means, if you are able to, suppose if now I am saying I want a particular car on rent. Okay, now if I want a particular car on rent, here if you are directly defining in the lease agreement that we will be giving you blue Honda City on rent. Here the which car you are going to get, which color, what specification, which car you are going to get. If you are exactly able to identify the asset, then only in such case it will come under the definition of the lease. The lease to fulfill the asset, to fulfill the definition of the lease, should be an identified asset. Okay, so identified asset means it is either physically distinct. Physically distinct, you're just able to tell that this is the asset that I have asked on lease. Okay, if it's physically distant, then in such case it is known as an identified asset. But now let's see that there are two conditions that the identified asset has to fulfill to be called as an identified asset. So yes, so now that we have understood there are two conditions that has to be fulfilled for an asset to be called as an identified asset, let's first see what is the condition number 1. Let's understand the condition number 1. So condition number 1 tells you that the asset which is going to be used as a part of the lease should be explicitly specified in the contract. Explicitly it should be written in the contract that if suppose you are taking a rent, okay, you are taking suppose a floor on rent or an apartment on rent, it should be on a lease. Okay, it should be explicitly specified that the 5th floor of the building will be given to on a lease to you. 5th floor of a building. Now this is very explicit. If you see that building, which building it is, that they will mention, and the 5th floor of it is yours. That is very explicitly specified. Okay, and the next is either you can explicitly specify it in the contract or implicitly specify it at the time when the asset is made available for use. Once when the asset is made available for use, you implicitly specify it. Okay, so how do you do it is either you can include some customization in it which indicates that that asset is for that particular customer only, or there is only that one asset of that kind which the customer has asked and you only have that one kind of asset with you. Now let's take an example for this. Now taking of customization, suppose there is one pink color car, okay, which you have made specifically because the lessee wanted a pink color car, then in such case it is implicitly specified, that pink color car is what it is going to be given on a lease to the lessee. When we talk of a single asset, so here single asset means suppose there is a company and you wanted suppose a blue Honda City on lease. If that company has only one Honda City on lease, then in such case it is implicitly specified that that car only you are going to get on lease. Correct? Yes. So now let's see the example. Okay, now let's see understand a few examples related to it. Now when we spoke about explicitly specifying in the contract, what happens if all the products are the same? Suppose all the floors in the building are the same, and in that case, suppose what happens is that here if you are told that you would be suppose given one apartment in the building, okay, and suppose in that building what happens is that all the apartments or all the floors in that building are just the same, all the houses are built the same way, then in such case even if it is not specified in the contract which specific apartment you are going to get, it's still okay. You can still assume that it is explicitly specified because any floor you get, it is not going to make a difference. Correct? Or if there is only one asset of that kind, then in such case also they need not specifically define in the contract that that asset only they are going to give on lease. It's okay. It is assumed that in these cases it is explicitly specified. Okay. So if suppose in the contract what happened was that you wanted a suppose you wanted a 5,000 square feet floor for you. Okay, and if in the entire building, if there is only one floor with 5,000 square feet and all others are suppose just 3,000 square feet, then the lessor, even if they don't mention the floor explicitly, you will know which 5,000 square feet floor you are going to get. So in such case and all, they need not explicitly specify. Okay, now talking about implicit specification, this is one illustration reference which I have taken here. Suppose India is getting oil through a pipeline. India is getting oil through a pipeline from Bangladesh. Okay, and there are 5 entities in India which are using the same pipeline to extract the oil. There is one pipeline only, but that pipeline 5 entities are using from India to extract oil. Here you cannot tell that which part of the pipeline belongs to that one entity. One entity cannot say that, that is my asset only. Okay, or I have the direct to use of that asset or something like that. So here this is not like a single asset which is only belonging to that one entity. So here this cannot be called as an identified asset. Whereas if there is one pipeline which is solely laid that for that one entity alone to get oil, then in such case it is a single asset, and it can be said that it is implicitly specified that it is for that entity alone, and you can take it into the definition of identified asset. So now that was about condition number 1. It should either be explicitly specified or implicitly specified, either in the way of it being a customized asset or a single asset. Okay. Then the condition number 2 which it has to fulfill is that there must be no substantive right of substitution with supplier. Supplier, that means the lessor. A supplier means the lessor. Lessor should not have the right to substitute the asset, or rather we can say lessor, there must be no substantive right of substitution with the supplier. Okay, yes. So now you all know what it means to substitute. Okay, substitution right you understand, but what is substantive substitution right? What is the word substantive particularly indicate here is what we are going to understand. Okay, so substantive means when the lessor has practical ability and is benefiting economically. That means if there is a asset which the lessor has given on a lease to a lessee. Okay, here first condition is that the lessor should not be able to alternate that asset. That means for the first 5 years they are giving one laptop to the lessee, and what happens is that after 5 years they are changing the laptop. That they cannot do throughout the period of use. Okay, if if the lessor has the power to substitute an asset, okay, then in such case what will happen is that it cannot be called as an identified asset here, because even if the start of the lease term you have identified it, after that it is being changed. Second is that here they have specifically told that there must be no substantive right of substitution. That means substantive means here, okay. So here the word substantive specifically means that the lessor, if he has the ability to alternate that asset, that means lessor has a practical ability to alternate the asset. Okay, that means if the lessor wants to alternate the asset, he has an available alternate for it, and he also is going to benefit economically if he is going to do such alteration or substitution of the asset. If these two conditions are fulfilled, one is that the lessor has a practical ability to alternate the asset, and the second one is that the lessor will benefit economically from such alteration. Alteration means substitution of the asset. Then in such case the lessor is said to have the substantive right of substitution, practical ability and benefiting economically. Okay, so the lessor should not have the substantive right of substitution. If the lessor has the substantive right of substitution, then it is not said to be an identified asset. So what if the lessor is going to have a substantive right of substitution? Then in such case lessee cannot apply Ind AS 116 on it. Okay, yes. I hope you understood that. That was all about your identified asset. These two conditions should be fulfilled. Then here what we read was, what is a lease? Let's read the definition again. What is lease? Lease is a contract or a part of a contract where the lessee has a right to control the use of an identified asset throughout the period of use. That means throughout the throughout the lease term, the lessee should have such right, with the exchange of a consideration, where in exchange the lessee is paying some lease payments. Okay, so that was all about what your lease means. Okay, yes, so your first chart has been completed where we understood the exemptions, the dates and the definition of a lease. I hope you understood this. Now moving on to the second chart. Here we are going to understand how are you going to separate lease and non-lease components. So in a contract there might be multiple assets. In a contract there might be multiple assets. Which of those assets are leased assets and which of those are non-lease components? How are you going to bifurcate it is what we are going to understand here. Okay. So now suppose, let's before understanding that, if there is a contract and if suppose it has only two assets. Okay. Here one of those assets is fulfilling all the conditions that it should fulfill to come under the lease definition. Okay, now what you have to do is, if there is one more component which is there, which is a non-lease component, then in such case you have to make a separate agreement for the lease component. You have to make the separate agreement for the lease component. Okay, before going into that, let's take an example so you understand better. If there is a customer and the customer is entering into a contract to lease the following items. So there is a contract and the following items which are given here, as you can see on the screen, are being put into a contract, and the customer is ready to lease all of these items. Okay, yes. So here the first item in that contract is excavator. So what is excavators? As you can see in the picture here, this is like one of those big machines which is used to, like, suppose an example for a crane or something like that. As you can see on the screen, this is what is an excavator. Okay, it is used to excavate the land. Yet, I hope you understand. Okay, now suppose there is an excavator. Then you have excavator attachment. So what are excavator attachment? Right here, as you can see, this what is there, the black color front portion of it, that you can change it into various other options. Okay, this, you can take this claw, or you can take this bucket, or you can take this trailer. Any of this optional attachment you have for it. Okay, yes. So you have excavator. Excavator attachment is also a part of the contract. Then you have a truck in that contract. Then you have a few materials and supplies, and then you have a few maintenance services. Now suppose all these items are in the contract. Let's start discussing about each of the components. First, talking of the excavators. Excavator is what? Excavator is an asset. Excavator is what? It is an asset. So now this is an asset. What kind of components are included in a lease? Lease contract also, lease also means that there must be an asset in it. So first it is fulfilling that condition, excavator. Second, there were two more conditions which it had to fulfill. One, as we read above here, let me show it again to you. You must get a benefit from the use of it. By using the excavator, you will get benefit out of it on its own itself. Second, the excavator is neither highly dependent nor highly interrelated with other assets. Correct? So, since it is fulfilling all of these conditions, here this excavator can be known as a leased. Okay, so this can be known as a lease component. This can be known as a lease component. Next is the excavator attachment. Excavator attachment also is an asset. You will get benefit from it, but here what happens? You cannot get benefit from it without it depending on any other thing. Excavator attachment, only if it is attached to the excavator, you will get some benefit from it. Okay, so it is dependent on another asset. So here, when you are making a separate lease agreement, you have to put excavator in that agreement into a separate lease agreement, or a separate lease component. If you are making, excavator will be a part of it. Along with it, excavator attachment, since you cannot make it into another separate lease component, you have to include it under the lease component of excavators itself. So excavator and excavator attachment both will come as a single lease component. Okay. Then talking about a truck, again truck is an asset. Truck, you can get benefit from it. And again, what we can say is that it is not highly interrelated or interdependent on anything else. So this can be turned into it can also be made into another separate lease component. So there is one first lease component which includes excavator and excavator attachment. A second lease component which includes truck. The fourth item here we are talking about is materials and supplies. So you have to understand what is included in lease. Lease includes asset. It does not include any kind of goods and services. Lease includes what? Lease includes assets. It does not include goods and services. So if you see materials and supplies, that means raw materials. This is a good. Okay, so this cannot be termed as a lease. So this will come under non-lease component. And then next, taking maintenance services for those trucks and plant and machinery, or for something, if you have taken maintenance services, this will come again under the definition of services. So this is not also an asset. So this will also be known as your non-lease components. So excavator attachment is one lease component, truck is another lease component, materials and supplies and maintenance services, since it is a good and a service, both cannot come under the definition of lease. Both do not come under the definition of lease. So it will go as a non-lease component. Okay. Yes. So I hope you understood this. So here you can record. So now you have understood that. Now you will be able to understand this. You can record a separate lease only if two conditions are satisfied. The first condition is that you must benefit from the use of the asset, like how the excavator was there, excavator attachments were there, then you had truck. You must be able to get benefit from the use of what? From the use of asset. Remember this, either on its own or together with, and the asset should neither be highly dependent or interrelated. So if any one of the condition here is also not satisfied, you cannot show as a separate lease. Both components should be satisfied to be shown as a separate lease. Okay? Yes, so I hope you understood this. Next is separate lease as non-lease. So from a total contract, you have to separate the lease component and a non-lease component. So non-lease component, what is a non-lease component? Goods and services are a non-lease component. Okay. Now suppose if there is something known as a property tax and insurance in a contract, what are you going to do about it? Okay, let's take another example here. Now suppose you have taken a building on lease. This building is an asset. So this comes under the definition of your lease. Okay. Then you have a maintenance service for that building which you have taken. Maintenance and for that you are also going to pay. Suppose for that building every year you will pay 30,000. For the maintenance that happens to the building, you are going to pay 10,000 every year. And then on that building, you have to pay a property tax of 3,000 every year. On that building, you have to pay a property tax of 3,000 every year. Here, what will happen? Building will come as a lease component. Maintenance service will go into a non-lease component. But what about this property tax? Here, property tax is neither a good, nor a service, nor an asset. So here what the standard tells you, Ind AS 116 tells you is that since property tax is neither a asset, good or a service, neither a lease nor a non-lease, then in such case you will split this property tax in the ratio. You will split this property tax in the ratio of standalone price of the lease and the non-lease component. So your standalone price here is nothing but your fair value. So you have to split this property tax in the ratio of fair value of the lease and non-lease component. Suppose the building rent which you are paying every year is 30,000, but the fair value of it is 50,000, and the maintenance service which you are paying every year is 10,000 rupees for it, but the fair value of it is 25,000. Then this 3,000 rupees of property tax cannot have a fair value, it only has one value, correct? So property tax of 3,000 will be split into 50,000 is to 25,000, 2:1 ratio between the lease and the non-lease component. Okay, so I hope you understood this. So allocate. So if there is something like a property tax and insurance, then in such case you have to allocate it between the lease and the non-lease component on standalone price basis or on fair value basis. Yes, I hope you understood this. Okay. So now when you are going to account for this lease and non-lease components, how are you going to account for it? How is the accounting for it going to happen? When you are going to account for it, always take the total amount of all the components. Here I told you, rent payable is 30,000, maintenance service is 10,000 and property tax is 10,000. What is the total of all these three? 43,000. Then in such case, you have to take the total of all the entire, lease agreement or the lease component, and then you have to split it into lease and non-lease. Then you can split it into lease and non-lease. Yes, on the basis of the ratio of standalone price of components. Okay, so here, so if there is 43,000 which you are paying in actual, you need not bifurcate this 43,000 as 30,000 into lease, 10,000 into non-lease and 3,000 as lease and non-lease. No, you have to take the entire 43,000. And how you did for property tax? You saw the standalone prices, correct? So you have to see the standalone prices or the fair value of the lease and non-lease components and split it accordingly. So 43,000 in the ratio of 50,000 is to 25,000 is. Yes, so I hope you understood this. Sorry, just a minute. Okay, yes, the screen is back. Fine. So now let's continue. So I hope you understood how you have to account for the lease and non-lease components in general. Okay. So there is one optional exemption which the lessee gets. Lessee has a lot of, options and exemptions which he gets in this chapter, whereas the lessor does not get any. So lessee gets an optional exemption here also. What this optional exemption says is that If suppose if there is a lease which you are taking, where you have a building on lease and along with that there is a maintenance contract, and that means maintenance contract means there is a lease component in the contract and then there is a non-lease component in the contract. If the lessee wishes, it is at the option of the lessee that he can club this lease and non-lease component into one and show it as a single lease component. So the lessee has the option to not separate the lease and the non-lease component and show it as a single lease component. Example, building and the maintenance services. Okay, so if it is doing so, then it can accordingly record it, and the same principle should be used to record all the same class of assets. That means all the buildings and all the maintenance services should be shown like this only. Yes, so this is at the option of the lessee. You have to usually bifurcate it, but it is at the option of the lessee. If it does not want to bifurcate, need not bifurcate. Okay, yes, I hope you understood that also. Fine. Now moving on to the next topic which talks about the lease term. Moving on to the next topic which talks about the lease term. Okay, yes, let's start with this. So what we are going to understand is that at the commencement date, you have to determine what is the lease term. That means for how much period is this lease agreement being valid, or for how much period have you taken this lease. For how much period have you taken this lease. Okay, so here lease term is calculated as follows. First, you have to take in the non-cancellable period. Non-cancellable period here means the period where you have to have the component on a lease, and you cannot say no to it, or you cannot return it, or you cannot give it back to the lessor. So it's like a non-cancellable period. In this period, you cannot cancel the lease. Suppose we have taken a car on lease, and you have taken it on a 10-year lease, out of which for the first 6 years, it is a non-cancellable period, that you cannot terminate the lease here, you cannot do anything. This 6 years is just a non-cancellable period. Then in such case, that will be considered in your lease term. Then if there is an option to renew period, the period, that means after 6 years, it is the option of the lessee whether he want to continue for the next 4 years or not. And if the lessee is reasonably certain that he would renew and extend the period, then in such case that period also you have to include in your lease term. So first the 6 years you will include, which is a non-cancellable period. Then the 4 years you will include, which is at the option of the lessee to renew, and he is reasonably certain he will renew and extend that period. And if there is any period where the lessee has an option to terminate, after this 10 years the lessee has an option to terminate the lease. Or suppose here let's take another example where the lessee has a lease term of 12 years, but after 10th year the lessee has an option that he can terminate the lease and not continue for the next 2 years. But if the lessee is reasonably certain that he will not terminate the contract and continue even after the 10th year, then the next 2 years which was under the termination contract, that also you can include, because that also, for that period also, lessee is not going to terminate and is going to continue with the contract. Correct? So non-cancellable period, renewed period if there is any, whether lessee is reasonably certain, and if there is an option to terminate but lessee is reasonably certain he will not terminate, then include that period also. So all these periods will get included and come part of your lease term and become part of your lease term. Okay, yes. So non-cancellable period. So when we talk about non-cancellable period, here when will you say that a period is cancelable or a term is cancelable? When will you say that? If there is two conditions which are being satisfied, then in such case we can say that the contract is a cancelable contract or the period is a cancelable period. Okay, what are the two conditions? Both the conditions should be satisfied for the period to be known as cancelable. The first condition is that the lessor and the lessee both can terminate without permission of each other. Any time during the lease term, lessor and lessee both have an option to terminate the contract. If that is a condition, then it can be called as a cancelable period. Along with that, even if they are terminating the contract, there is no significant penalty. That means there is an insignificant penalty which the lessor lessee both would not care whether they have to pay for it or not pay for it. They would pay for it if they want to also. It is very insignificant in nature. If these both conditions are there, then in such case it will be known as a cancelable lease. Why they are talking about insignificant penalty here? It is because if there is a significant penalty, what might happen is the lessor and lessee might think twice whether they want to terminate it or not, and they can extend the period. But if it is an insignificant penalty, if they wish, they will cancel it then and there. Correct? So if these both conditions are being fulfilled, then that means that becomes an cancelable period. The period where these both conditions are getting fulfilled will become a cancelable period. Okay. So here you have to remember, so now here we read that if the lessor and lessee both have the option to terminate. Now what happens if only the lessor has the option to terminate? If the lessor has the option to terminate, then in such case it does not matter. It is not considered. It will be considered as a non-cancelable period only, and you can include it in your lease term. Even if the lessor is reasonably certain, it still does not matter. You can include it in your period. You can include it in the period of the lease term. Now what if lessee only has the option to terminate? Only lessee has the option to terminate, and if the lessee is reasonably certain, and if the lessee is reasonably certain that he would terminate the contract, then in such case you need not include the period. So here always lessee has the right. But if the lessee is reasonably certain that they would not terminate this contract, then in such case you can include it. If the lessee is reasonably certain they will terminate, need not include the period. If the lessee is reasonably certain that they would not terminate the contract, then in such case include that period. Okay, yes. So that was about your non-cancelable period. Now talking about the option to renew the period. So here, for what reasons, do you think that the lessee will extend the period of the lease term or renew the period of the lease term? Reasons can be that than the market, here you are getting more benefits in the lease. For that reason, you can extend it. Okay. Or if there is an asset which is a very specialized asset, and the significance of the asset is so high that you cannot quickly today if you're stopping the lease term, tomorrow you'll get another like that. That is not possible. Then in such case also you can extend the lease term. The location and the availability of the asset is such that there is no better find than this. So for that reason also you can extend your lease term, or you can apply for the option to renew. And suppose if the existence of a significant leasehold improvement, suppose at the end of third year, suppose the asset lease term is 5 years. At the end of third year, you have made some major improvement to the asset, by which what has happened is that the benefit of that improvement, you will only get it by the next 5 years. So in this case, next 2 years, you will not stop the contract because the benefits you are going to still get for the next 5 years, right? So for 5 years, you will extend it. So reasons like these can be a part why the lessee wants to renew the period. Now talking about the option to terminate, I already spoke about it. If there is a significant penalty, then in such case lessee might usually not terminate. But if there is significant penalty and if the lessee is getting a better find outside, then he will terminate and go. So your termination, you do not have any such specific conditions. If the lessee is reasonably certain he will not do it, then include the period. Then include that period. Okay. So you have to include non-cancelable period, renewed period, and the period where the lessee is reasonably certain where he will not terminate. Okay. Yes. Now that was about the normal lease term. Now suppose what about a lease term where it is non-consecutive in nature. That means it is not a continuous period of lease term. Suppose what might happen is that suppose we have taken a shop on rent, and in that shop we are selling what? Umbrellas. Now umbrellas business will only happen in October, November, December of a year. So you only take that shop on rent for these 3 months and you sell umbrellas. For the rest of the years, you again give the shop back to the lessors. Suppose now you have made a lease contract such that where it says every year for this 3 months you will get this shop on lease for the next 5 years. So how much is the lease period? Yes, for 5 years you are getting it on lease, but it was not for the complete 5 years, but every 3 months of those 5 years. So 5 into 3, for 15 months you are getting it on a lease. So this way also you can calculate your lease term. So if it is a non-consecutive lease term, then in such case you can aggregate all the non-consecutive period to find the total lease term. Like how you find it out here, 15 months. Correct? Yes, I hope you understood that too. Now we are going to understand the next part of the lease term where you reassess the lease term. At the starting you find it out. That is a different case. Whether you find it out using the normal calculation or a non-consecutive lease term. But what if there is a reassessment of a lease term somewhere in between the lease period? Reassessing, that means you are again reassessing and checking if there is a change in the lease term. Now, why this reassessment will happen is because suppose if you have made any significant changes in the lease or in the lease asset, or if there is any event which is significantly occurred by which you think there might be a change in lease term, then in such case you will reassess the lease term. So when and all can such significant changes or events can arise is that here we have given a few examples to this. Here either you can have made a significant leasehold improvement by which there might be a need to reassess, or significant modifications or customizations you might have made, or there might be a business decision which you have taken which might affect the lease term, or you have made a subleasing which is beyond the exercise date. That means in such case also you can reassess your lease term. Any significant improvement has been made, any customizations or significant modifications has been done, any business decision is affecting your lease term, or any subleasing has happened which is beyond the exercise date, then in all such cases there might be a need to reassess your lease term. Okay. Yes. So this reassessment of lease term, first it should be within the control of the lessee. Suppose when you are reassessing a lease term, these all examples which I have given is under the control of the lessee. That means these changes should not happen because of some market based factor, because some external thing is changing. You need not reassess your lease term. Inside your firm, internally if something has changed, like internally you have made improvement on the asset, internally you have made some modification, or internally you have taken some business decision, because of these factors, if it is within the control of the lessee, if the factors are in the control of the lessee, then in such case only it will trigger reassessment. If the factors are not in the control of the lessee, are in the external thing of this lessee, then it does not trigger the reassessment need. Then you need not do reassessment there. Okay. And it also affects the reasonability of the lessee to exercise the option of purchase, renewal or termination. An incident has happened such that it was within the control of lessee. Okay, it all happened within the control of lessee only, the event or the change. But because of such event or change, due to such event or change, it is affecting the reasonability of the lessee to either purchase, renew or terminate the contract, then in such case you can do a reassessment. So now we have understood when can a reassessment happen, at which and all cases it should be in the control of the lessee and it is affecting either the renewal, purchase or termination option of the lessee. So that was all about your reassessment. Hope you understood it. If there is anything, if you did not understand, you can leave it in the comment section below. I'll try to answer it and solve it and clarify it for you. Okay. Now lease term, what will the lease term, how will the lessor calculate the lease term? Here the lessor will not calculate any lease term by itself. Whatever the lessee is calculating and giving it to the lessor, that will be considered as the lease term for the lessor too. So that was all about your lease terms. I hope you understood this. Yes. So until now what we have read, I'll just go through again. We understood about the exemption option. We understood about dates. We then understood what is a lease. We saw about lease and non-lease components. And then we understood about lease term. So these were all that we have understood until now. And if you're feeling, if the pace of the lecture is high and if you're feeling it's going too speed, then there is a speed option by which you can reduce the speed of the video and also see. You can do that. Yes. And if you're feeling it slow, increase the speed of the video and see. Okay. Okay. Yes. So I think with this we will end our first part of the video. So in this we have covered all the major part related to theory. Not major, all the parts related to theory which was there in your book. So in your ICAI material, let me tell you until what page number we have covered. So you can also cover along with me. Yes. So until page number 129, 7.129 I have covered. 7.129 I have completely covered each and every point which is there until this. So this starts with what page number? 1 minute. Yes. So from 7.91 to 7.129 we have covered all these pages. I think it's around 40 pages if I'm not wrong. So 40 pages of content we have covered in this video. So related to this theory part, there are around 18 illustrations that we are going to solve right now. Okay. Starting with the illustration number 1. So illustration number 1 is related to your short-term lease, where you say that the lessee can claim exemption if the short-term lease condition is fulfilled. Okay. So in scenario A here, what happens is there is a lessee and lessee gets into a lease of 9-month non-cancelable period. So 9 months is the lease term here, initial lease term here. There is an option to extend the lease for 4 months. So 4 more months, the option is there for the lessee to extend it. So if the lessee chooses to extend it, it will become 13 months, which is more than your 12 months. So okay, so this cannot be a lease, short-term lease anymore if the lessee is going to extend it. Correct. So here then they say that lease does not have a purchase option, which is well and good. They are saying at the lease commencement date, the lessee is reasonably certain to exercise the extension option. So if lessee is reasonably certain to extend the extension option, extend the lease term will become 13 months here, which is more than 12 months. So here they cannot claim the short-term exemption. So because of this, they cannot claim the short-term exemption. So there is no exemption here. Okay. So they have to apply all the provisions of Ind AS 116 to that lease and account accordingly. Okay, scenario B, they are saying there is the same facts as scenario A, except lessee is not reasonably certain to extend. And they are saying that there are no other factors that would make him exercise the renewal option reasonably certain. So they are saying here they are not going to extend for extra 4 months. So your lease term here will be how much? 9 months only. So this is less than your 12 months. Okay, so here this can be said as a short-term lease and you can avail exemption here. So that was your illustration number 1. Moving on to your illustration number 2. So illustration number 2 is related to your asset implicitly specified in the contract. So here they are saying there is a customer XYZ. They enter into a 10-year contract with the supplier ABC. So here XYZ is the lessee and ABC is the lessor. They enter into a 10-year contract using of rolling stock specifically designed for customer XYZ. So there is a rolling stock which is the asset here. So they have entered into a lease for use of this asset which is a rolling stock, and this is specifically designed for customer XYZ. So this is like a customized asset for customer XYZ. Okay. Then they are telling that the rolling stock is designed to transport materials used in XYZ's production process is not suitable for any other customer. So this asset which is given to lease on customer XYZ, which is specifically designed for customer XYZ, this cannot be used by other customer. This is not suitable for other customers. Okay. So here what they are telling is, in the contract, it is not explicitly specified. So in the contract, they have not explicitly specified that this is the rolling stock that they are going to give to them. But supplier ABC owns only one rolling stock. So here one, the asset is customized. Number 2, it is a single asset. So here it is a single asset only. Okay. And what they are telling you is that the rolling stock does not operate properly. The contract requires supplier ABC to repair or replace the rolling stock. Okay, this information is not needed here. So they are asking if this is an identified asset. Here the answer is yes, this is an identified asset because it is one customized asset, and second, it is a single asset. So even though it is not specifically mentioned in the contract, it is assumed that it is implicitly specified in the contract. Okay, yes. The illustration number 3 says that there is customer XYZ. They have a 10-year contract with supplier ABC for the use of a car. So here the asset is the car. Specification of car is specified in the contract. So explicitly they have specified in the contract the brand, type, color, options, etc. Like explicitly they have not told here that we are going to give you this car only. Like they have not identified and told him, but they have told him that this brand they would need, this type they would need, this color they would need, these options they would need. So all other specifications they have given related to the car.
Okay, and what they are telling you here is at the inception of the contract, the car was not even built. So if it is not built, you cannot explicitly say that that car only you are going to get. But since all other information about the car was given, by which you can easily identify that that is the car that you are going to go for, that is the car you are going to get for lease, here this becomes an identified asset. So here all specifications related to the car is provided, and even though the production of car has not started, you still know and you can identify the asset. Therefore, it is assumed that here it is implicitly identified asset. Okay, so that is the illustration number 3. Illustration number 4 talks about your substantive substitution right. So here there is a electric data storage provider. Okay, so there is a lessor and he does electric data storage, and they provide services through a centralized data center that use the involve of a specific server. So there is a lessor and they use a specific server to provide their services, which is server number 10. Okay, the supplier maintains many identical server in a single accessible location. So in one location itself, this lessor has a lot of servers. Okay, so at the inception of the contract, 1 minute, this is lessor has, okay. At the inception of the contract, it is permitted to and can easily, so here what they have written, at the inception of the contract that it is permitted and can easily substitute another server without the customer's consent throughout the period of use. So here what they are telling is the lessor is permitted to substitute the asset, and the lessor can also easily substitute the asset with another server. So since he has a lot of identical server, the lessor is one permitted according to the contract, and second he can also easily substitute the server. So two conditions should be fulfilled for the right of substitution to be substantive. One is practical ability. So here he has a practical ability. You have to see whether the lessor will also benefit economically. So here they have said the lessor would benefit economically too. So both the conditions are getting fulfilled here. So here it is said that the lessor has a substantive substitution right. Lessor has what? Substantive substitution right. He can easily replace another server, and he also is going to benefit economically. Okay. So here the supplier has made clear that it has negotiated this right of substitution as an important right in the agreement. The supplier also has made it clear, the lessor has also made it clear that he has this right in the contract itself. So here they are asking whether the substantive substitution rights are substantive. Yes, it is substantive because both the conditions are getting fulfilled, and whether this is an identified asset. If the lessor has a substantive substitution right, then it cannot be an identified asset. Okay, so the answer here is no. In scenario B, the server 10 is customized here. There is a particular customized server for the lessee. Okay, and they do not have the practical ability to substitute, and also they are not going to benefit economically. So both is not here. So this here it says that lessor does not have substantive substitution rights, and since the server 10 is customized, this is also an identified asset. So whether it has substantive substitution right, answer is no. Whether this is an identified asset, yes, it is an identified asset because it is a customized single asset. Okay. So I hope you understood illustration 4 also. So if you feel the speed is a little high, you can slow down or pause the video and go through it again. Okay. Yes. So illustration number 5. So here the customer XYZ enters into a 15-year contract with supplier ABC, and they have a right to use of 5 fibers within a fiber optic cable between Mumbai and Pune. So here there is customer XYZ, they have entered into a 15-year contract with supplier ABC. They have the right to use of a 5 fibers within a fiber optic cable. Okay. Then they are telling that the contract identifies 5 of the cables, 25 fibers for use by customer XYZ. The 5 fibers are dedicated solely to customer XYZ's data for the duration of contract. So here they are telling that customer, the lessee, can use 5 fibers. Okay. And here they in the contract they have around 25 of those fibers, and out of which 5 fibers are solely for customer XYZ. 5 fibers are solely for customer XYZ and data for the duration of contract term. Here a supplier ABC does not have a substantive substitution rate. So whether this is an identified asset, yes, this is an identified asset because this is solely given to customer XYZ. Okay, those 5 fibers are solely given to customer XYZ. So therefore, it is a identified asset here. Illustration number 6. Again, customer XYZ enters into a 10-year contract with supplier ABC, right to transport oil from India to Bangladesh. So from India to Bangladesh, they are going to transport oil. Okay, through suppliers ABC's pipeline. So the customer is going to supply oil through this. Here the right to use of the 95% of the pipeline capacity is with the customer XYZ. So customer XYZ has the substantial right to use this pipeline. So here what they are telling is whether this is an identified asset or not. Here, yes, this is an identified asset. It may not be physically distinct. But since substantially all the capacity of the entire pipeline is with the customer itself, therefore they say that they have the right to obtain substantially all economic benefits from it. So therefore this is an identified asset. Okay. Because here it was a substantial right that they have. In the next case, they say that the right to use here is 65% of the capacity. Here it is not substantial. Substantial means we can for say 80% or more. That is a substantial right you have to an asset. Here it is only 65%. You must not see majority who has it. You have to see substantially who has the right. Here substantially the customer does not have a right. It is just 65%. So therefore this is not an identified asset. Okay. Yes, so that was your illustration number 6. Illustration number 7. So in illustration number 7, they say the right to use of a portion of the term contract. So here what they are telling you is that ABC Limited enters into a contract with XYZ Limited and they grant ABC Limited exclusive rights to use a specific grain storage facility. So for a specific grain storage facility, they have given on a lease for a 5-year period in the months of May and June. So in 5 years, every year only for 2 months that will be used by the lessee. Okay. During these months, ABC Limited has the right to decide which crops are placed in storage and when to remove them. So in that grain storage facility, what grain they can store and what grain they cannot store, that all rights are with the lessee itself. Okay. Yes. During the other 10 months of the year, XYZ Limited has the right to determine how the warehouse will be used. And in the remaining 10 months also, what they are selling here is that in the remaining 10 months, here what they are saying is that XYZ, the lessor only has the right to determine how to use, lessee does not have any right. So here which party has the right to control the use? Here, since this contract is only made for 2 months in a particular year, in that 2 months you have to see who has the right. In that 2 months, how to use the asset and for what purpose you can use the asset, that right is with the lessee only. So therefore, in the above case, ABC Limited, the lessee has the right to use the asset during the period of use. During whenever it's using, at that period lessee only has the right of use. Correct? In the other months, lessor has the right to use. Okay. Yes. Next illustration is illustration number 8. So illustration number 8, they say that the company MNO, it enters into a 15-year contract with another power company to purchase all of the electricity produced by a new solar firm. Okay. So PQR owns the solar firm. The lessor owns the solar firm and will receive tax credits related to the construction and ownership of solar farm. So in that solar farm, whoever is constructing and whatever the tax credit is related to that, that is going to get, those benefits are going to go to PQR only. The tax credits, those benefits will be received by the lessor only. MNO will receive the renewable energy credits that accrue from the use of solar farm. So from using of that, so here there are two parts. One, from the use of solar farm, that benefits are going to go to the lessee only. And other than that, if there is any tax credit which is related to the ownership of the firm, ownership of that solar farm, that is going to go to the lessor. So here they are asking who has the right to substantial benefit. Who has the right to substantial benefit? Here the answer is lessee only has the right to substantial benefit. Because when we talk about substantial benefit, we talk about the benefits that you are going to get from the use of the asset. From the use of the asset, who is getting the substantial benefits? The lessee is only getting the substantial benefits here. Okay. Because the primary product from the use is also going to got by the lessee and the byproduct is also going to go to the lessee only. Here the tax credit which is there, it is neither a primary product nor a byproduct. Okay, so it is just relating to the ownership of solar farm and not the use of the solar farm. Okay, so therefore here the lessee is said to have the right. Next, moving on to illustration number 9. Yes. So here they are saying there is customer XYZ, they enter into a contract with supplier Y for a vehicle for a 5-year period. Okay, they are saying you cannot substitute it with another vehicle. Okay, so here customer X operates the vehicle, directs and others to operate. So customer X means lessee has the right to operate and also direct to operate. Customer X decides how to use the vehicle. How to use the vehicle, that right is also with the lessee only. But supplier Y prohibits certain uses of the vehicle to protect its interest. So supplier's protection, if there are any restriction, that is fine. I told you, you need not take that into consideration while seeing who has the right to that asset, right to direct the use of the asset. So here, since the operating right is also with the lessee and how to use the vehicle, that right is also with the lessee only. So therefore here you can say that the direct to use, right to direct the use of the vehicle is with the lessee only. Okay, so that was the illustration number 9. Illustration number 10. So here they say entity A contracts with supplier H to manufacture parts in a facility. So there is one facility in which they are going to manufacture a few parts. Entity A designed the facility. So here the lessee has designed the facility. Okay, and provided its specifications. So he had a major part in designing of that leased asset, and also the specifications were provided by them. Supplier H owns the facility and the land. So the lessor owns the facility and the land, but the lessee had a great part in designing the facility. So entity A is the lessee here. They specify how many part it needs and when the part needs to be available. Also here they are saying that lessor operates the machinery and makes all operating decision, including how and when the parts are to be produced. So here lessee designed the asset, whereas lessor owns the asset and also says how to operate the asset. Okay, supplier H cannot substitute the facility. So here supplier H does not have the right to substitution. Okay, so here you have to say which party has the right to control. Here what they are saying is entity A. Entity A means the lessee does not direct the use of the asset that most significantly drives the economic benefit, because supplier H determines how and when the equipment is going to be operated once the contract is signed. So even though the lessee has designed the asset, once the asset is ready, okay, after that the lessor only has a major say on how to operate the asset. So therefore the major benefits will also go to the lessor only here. So therefore here it is said that lessor has the right to control the use of the asset. So here it is said that lessor has the right to control the use of the asset. So here lessor has the right. Okay, illustration number 11. There is entity L. It has got into a 5-year contract with company A, a ship owner. Entity L decides whether and what the cargo will be transported. So here the lessee has the right to say whether and what will be transported in the cargo. Okay, and when to which ports should it be transported, subject to restrictions specified in the contract. These few are a fine restrictions, because these restrictions prevent entity L from sailing the ship into waters at a high risk of piracy or carrying explosive materials. So here they are saying it is only for the protective right of the lessor that the lessee is restricted, but otherwise all the other decisions can be made by the lessee. So company A operates and maintains the ship and is responsible for safe passage. So here company A is operating the ship. But who, where, how it should be operated, who that is saying, that is with the lessee only. So who is operating, it does not matter. Who has the right to direct how to operate it? Lessee only has the right. So here since entity L, the lessee has the right to direct the use of the ship. Therefore the lessee has all the powers here. So lessee has the right to direct the use of the ship here. So now let's move on to illustration number 12. So illustration number 12, they say, this is excavator and related accessories. I told you how many lease and non-lease components are there. Here there is only one lease component, which is excavator and its related accessories. That is one component. Okay. So how many lease are there? Oh, there is only one lease component. This I already told you in the theory lecture itself. Then we saw about a loading truck. Truck is also one single lease component, and then they have told. So here they are telling that truck is one, so in scenario B they are saying assume there are same facts as scenario A. So there is excavator, its related accessories and loading truck. So here how many lease components are there? There are two lease components. One is excavator and excavated accessories, and one is the loading truck. This we saw already in the lecture itself, so I am not re-explaining here it. here again. Okay, then illustration number 13. So here they are saying that there is entity L. It rents an office building from landlord M for 10 years. So for 10 years they have taken this. The rental contract stipulates that the office is fully furnished and has a newly installed and tailored HVAC system. Okay. Then it requires the landlord to perform all common area maintenance. So here the maintenance activity is taken by whom? The lessor itself. Entity L makes single monthly rental payments and does not pay for the maintenance separately. So including one payment itself, they pay including maintenance itself. They don't make any separate payment for maintenance. Office building has a useful life of 40 years and the HVAC system and the furniture has a life of 15 years. So here what are the units of account in the lease? So here they are saying that there are 3 components in the arrangement. One is a building asset, that is office building and HVAC. The office furniture is one more component and then the maintenance agreement is one more component. So there are 3 components in this. One, you are taking the office building on lease, that along with the HVAC system itself, because in the building itself that HVAC system is installed. Office furniture is a separate item which you can take, and then the maintenance agreement is a separate item. Okay, so here they are saying that the office building and the HVAC system are one lease component because they cannot function independently of each other. The office building can function independently, but what about the HVAC system? The HVAC system, since it is installed in the office building, that will form part as a one lease component. The furniture of the office, the furniture which is here, it can operate separately, correct? You can get the benefit from its use separately, and also it is not highly interrelated or interdependent on any other asset. So here the office furniture functions independently, so it can be used on its own, and that will be a separate lease component. And when you talk about the maintenance agreement is a non-lease component, as you all know, because it comes under goods and services. Yes, I hope you understood illustration number 13. Moving on to illustration number 14, here they are telling that there is a 5-year lease of equipment. They have an annual payment of 10,000 which they are going to pay every year. For that equipment, they are going to pay 10,000 as fixed annual repayments. In this 10,000, 8,000 is for rent, 1,500 is for maintenance, and 500 is for administrative tasks. So this 800 is for rent of the building, which is for the lease of the building. So this will go as a lease component. 1,500 is for maintenance, that is, it is for the services. So this will go into a non-lease component. But what about this 500 of administrative tasks? This is neither a lease component nor a non-lease component. So it has to be split between the lease and the non-lease portion on the basis of the standalone prices. We have already read this. This example also I have already given you. Okay. Yes. So here what you have to do, you have to take the total of... So here as you can see, there are 2 components, lease component and the non-lease component, which is maintenance service. And here the administrative task is neither a good nor a service. Okay, and then for there this will come separately. Assuming the lessee does not elect the practical exemption. So here they are saying, assuming that the lessee is not going to go for the practical exemption where you can club in both the lease and non-lease component together. Here just assuming that the lease component and the non-lease component will be accounted for separately. They are saying the administration charge is included in the total consideration to be allocated between both of these components. So here the total is how much? The total is 8,000 plus 1,500 plus 500, which is 10,000, and this you are going to pay for how much years? 5 years, because it is a 5-year lease component. So 50,000 rupees in total. This you have to allocate between lease and non-lease component is what they are saying. So when you are allocating this 500 will also get allocated as lease and non-lease component. Okay, in the ratio of the standalone prices, you have to split this total consideration. Illustration number 15. So here they are saying the lessee enters into a lease of an equipment. The contract stipulates lessee will perform maintenance and receive consideration for maintenance services. So sorry, lessor. The lessor will give maintenance services and in return he will get some consideration. So the lease consideration is 80,000. Maintenance is around 10,000. So total 90,000. Here the standalone prices are lease standalone price is 85,000. Maintenance standalone price is 50,000. So here the total is 1 lakh. So here they have said they are not opted for practical expedient. That means they have not opted for the exemption, which is where you can account for the lease and non-lease component together. You have to account separately only. So here how are you going to account it? I already told you, you should never take the direct value actual values and account it. Rather, you should take the total of lease and non-lease component, that is 90,000, and you have to split it in the ratio of their standalone prices. So 85,000, 15,000. So 95,000 in the ratio of 85:15. You have to split lease and non-lease. So it will be 76,500 and 13,500 of non-lease. So this is lease of 76,500 and non-lease portion of 13,500. That is how you have to account for this 90,000. Okay. I hope you understood that. So which one did we finish? So illustration number 15 we are done. Illustration number 16. Just a second. Yes. So illustration number 16, they are saying there is a non-cancellable term of 6 years. Then there is a 2 years fixed price renewal option. And then there is no termination penalties. They are saying entity ABC is reasonably certain to extend the renewal option. And what is the lease term? So lease term is a non-cancellable period of 6 years plus, since they are reasonably certain that they would extend this period for 2 more years, so plus 2 more years, 8 years is the lease term here. Scenario B, there is a non-cancellable term of 8 years, 2-year market priced renewal option. So there is a 2-year of renewal option. Leasehold improvements are expected to have a significant value at the end of 8 years. So at the end of 8 years, they are going to do some leasehold improvements, and that's going to have a big value. And that's what are you going to say? What they are saying is you can only realize the true value and the true potential of that leasehold improvement if only and only if you are going to continue for a few more years. Okay. So here what happens is it indirectly says that the lessee might extend with the renewal option. So here again you have to do plus 2. So 8 plus 2, 10 years is your lease term. In scenario C, what they are saying is there is an entity, it only uses the retail space, that is the shopping center which it has taken on lease for the months of October, November and December. Only for 3 months in a year it uses, and it has a non-cancellable term of 7 years. So 3 months in a year multiplied by 7 years, it will be 21 months in total. That will be your lease term. Okay. Now moving on to the next illustration, illustration number 17. So here they are saying retailer M has a 5-year lease and 2 successive 5-year renewal options. So first there is a 5-year lease and plus another 5-year you have a renewal option. On commencement date, retailer M is not reasonably certain to exercise the extension. So since it is not reasonably certain, only 5 years of lease will until now be covered as your lease term. At the end of 3rd year, what happens? Retailer M extended to include another floor from year 4 due to a business acquisition. So it has extended to include another floor. So they have first only taken one building floor on rent. Now they have taken another building floor on rent at the end of 3rd year. Okay. On lease at the end of 3rd year because they wanted a floor because they have acquired some business. Okay. Lessee concludes that a separate 7-year lease for the additional floor of the building is in the already building lease. So here what they are telling is for this already we have a 5-year lease term. For this another floor that we have leased, we will have a separate 7-year lease contract. So here retailer M is required to reassess the lease term. In this case the answer is yes. They are required to reasonably reassess this because here what happens, since the retailer M has entered into a fresh lease of another floor of 7-year term, here what might happen is this floor, since they are going to use for 7 years, that means at the end of 3rd year they are going to use for more 7 years. Here at the end of 3 years there will only be more 2 years left, correct, because the total term is only 5 years. So since this itself they are going to use for 7 years, it indicates that the another floor that they have taken also they might extend it and use it for another 5 years. Okay, so therefore here you need to reassess your lease term and see whether you want to extend it or not. Okay, and check whether you want to extend it or not. Illustration number 18, and this is the final illustration for this video. So company N has taken 10 vehicles on leases. Initial lease term is 5 years. There is an option to extend for another 5 years. The remaining useful life of the vehicles on commencement date is 15 years. So on commencement date the life of the asset is 15 years. Okay. And the lessee is reasonably certain to extend the extension option. So 5 years of lease plus 5 years of renewal option. So 10 years is the lease term until now. Then they are saying that at the end of 4th year, there is a government announcement, that the particular model of this car will have to be discontinued. At the end of the 4th year, they are getting a bad news that by after this the car model will get discontinued and in the roads you cannot drive this car anymore. So will he again now here what he has to do is, at the start he accounted it as a 10-year lease term. But right now, since at the end of 4th year itself, again if you are seeing, you will not extend it for another 5 years, because from now on you cannot use that car. Even if you are leasing, you have to keep it at your home only. So therefore you will reassess and you will see whether you want to remove this extension option, and you will only account it for 5 years of lease. Okay, yes. So this will prohibit the lessee from exercising the extension option. So here the non-cancelable period has to exclude the extension option of 5 years.
So yes guys, we have come towards the end of the video. So in this first video, in the first part, we have covered all the theory along with 18 illustrations from ICAI module. So in the rest of the videos, we'll be covering the rest of the illustration along with the rest of the theory. So thank you so much for watching till the end. To have a look on this mind map, or if you want this mind map, it will be linked in the description box below. You can join my Telegram group. And if you want to refer to any other Ind AS, the Ind AS playlist will also be linked in the description box below. So you can check that out. Thank you so much for watching the video. If you like it, please make sure to like, share and also subscribe to the channel, and don't forget to click on the notification icon so you get notified every time I post a new video. Thank you so much guys.